Hello friends. Adani Group has been a topic of discussion and controversy in recent times. Hindenburg Research published a report on the company and its practices, raising concerns about the company's financials, governance and environmental practices. The Adani Group has lost more than $113 billion in market value in 2 weeks since the US short sellers critical report was published. Today in this video, let us look at what are the allegations on the company and try to read behind the headlines. Before we move ahead, please subscribe to the Upfront and press the bell icon to get notification of all our updates. I am Nihal Mohammed and you're watching the Upfront. What are the allegations? According to the report, Adani Group has a history of questionable financial practices, including inflated revenue and earnings and dubious connections with offshore entities. The report also suggests that the company has been engaging in environmentally harmful practices such as illegally clearing forests and endangering wildlife. Furthermore, the report highlights the close relationship between the Adani family and the Indian government, with the company receiving favorable treatment and subsidies. The report also claims that the company has been involved in corrupt practices such as bribing officials and disregarding environmental and labor regulations. What has been the response? Shares in billionaire Gautam Adani's companies have been in free fall since a critical report by Hindenburg Research published on January 24th came out, with group cumulative market losses now topping $113 billion, sparking fears of wider financial contagion. Opposition parties who called for a parliamentary panel to investigate the saga disrupted the proceedings and have questioned Indian Prime Minister Narendra Modi's closeness with Adani. Protesters also expressed anger about investments made by state-backed Life Insurance Corporation and State Bank of India in the Adani Group. The report has sparked public outrage, with many calling for greater accountability and transparency from Adani Group. The company has faced criticism from environmental groups and investors who are concerned about the company's impact on the environment and the financial risks associated with their practices. At New Delhi's Jantar Mantar, a Mughal-era observatory that doubles up as a protest site for all causes, protesters held up banners and shouted slogans against Adani. Some broke through barricades, forcing the police to detain them. Common man has invested his money in a businessman's, Gautam Adani's company, and the government is trying to save him. The government is supporting the businessman Adani and not the common man. Uttar Pradesh Congress Committee General Secretary Shiv Pandey was quoted as saying by ANI News Agency. At Jantar Mantar, some burnt a suitcase with an SBI logo on it. In Mumbai, a protester held a placard with Adani's photo and the LIC logo, explaining with a bar chart how much has LIC invested in Adani Group. LIC holds a 4.23% stake in the flagship Adani firm, while its other exposures include a 9.14% stake in Adani Ports and 5.96% stakes in Adani Total Gas. SBI said last week its total exposure to Adani Group was 0.9% of its total loan book, or around 270 billion rupees, that is $3.30 billion US. What has been the response from Adani? Although the Adani Group has responded to the report, these answers have not been satisfactory as said by Hindenburg. Hindenburg says that Adani failed to specifically answer 62 out of our 88 questions. Adani Group has not responded to this due to various reasons. Firstly, it may be a strategy to avoid further negative publicity and damage to their reputation. Secondly, the company may be waiting for the results of investigations and audits to determine the validity of the allegations made in the report. It is also possible that the company is seeking legal advice on the best way to respond. Adani also tried to paint this incident with nationalism. The weaving of a narrative of nationalism into the matter is not relevant, as the issues raised in the Hindenburg report are primarily financial and corporate in nature. The allegations are related to accounting practices, financial reporting and governance, which are independent of the nationality of the company or its owners. The attempt to introduce nationalism into the issue appears to be a distraction from the main issue and is an unnecessary complication. The focus should be on ensuring that the allegations are thoroughly investigated and that appropriate action is taken based on the findings regardless of the nationality of the company or its owners. Fraud cannot be obfuscated by nationalism. In today's world, nationalism is often used as a tool to hide the truth and mislead the public. Companies are quick to adopt the rhetoric of nationalism in order to obfuscate their fraudulent activities. However, the Hindenburg Research report has shown that this strategy is unlikely to succeed in the long run. False propaganda and nationalism have long been used as defense mechanisms to manipulate public perception and control the narrative. One more recent example of this false propaganda as a defense tactic is the recently produced BBC documentary on the 2002 Gujarat riots. The documentary aimed to shed light on the communal violence that took place in the state over a Muslim minority, but it was met with widespread criticism from the Indian government and citizens who accused the BBC of portraying India in a negative light and spreading false information. The controversy surrounding the film highlights the role of false propaganda in shaping and strengthening purely nationalistic narratives and influencing public opinion. What are financial manipulation and fraudulent activities? In a similar vein, there could be a parallel drawn to the financial thriller Scam 1992, the Harshad Mehta story, and the Hindenburg Research report on Adani. Both showcase the financial manipulation and fraudulent activities of individuals or companies in the stock market, leading to a major financial scam. They highlight the importance of due diligence and regulation in the financial sector to prevent such scams from happening. The Scam 1992, the Harshad Mehta story, India saw two brothers take the nation for a ride. The scam involved the brothers falsely claiming to have access to a treasure trove of gold and other valuables. The scam not only caused financial losses for many investors but also cast a shadow of distrust over the entire nation. After 30 years, what has changed in India is the increased awareness of scams and financial frauds, as well as the government's crackdown on such activities. The establishment of regulatory bodies like the Securities and Exchange Board of India, SCBI, and the Reserve Bank of India, RBI, has helped to prevent financial fraud and protect the interests of investors. However, history does seem to repeat itself as scams and false propaganda continue to be used as defense mechanisms in India. The recent Hindenburg Research report and the BBC documentary on the 2002 Gujarat riots are two examples of this phenomenon. The fact that these tactics continue to be used highlights the importance of increased awareness and vigilance, as well as the role of regulatory bodies in ensuring transparency and accountability. Finally, the report from Hindenburg Research raises serious concerns about Adani Group's practices and their impact on the environment, financial stability, and governance. It is imperative that the company addresses these concerns and takes measures to improve its practices and promote transparency. The public, investors, and government should hold the company accountable and demand greater responsibility for its operations. That's it for today. If you like the content we provide, please subscribe to the Upfront and press the bell icon to get notification of all our updates. Please share our videos and educate others. Thank you.